When will investors' dark days end? A stormy journey unfolds. Have you ever felt a moment when it seems like the sky is collapsing above you, and yet you can do nothing about it? When all your investments, all your hopes, and the financial foundation you built start crumbling one by one. That's exactly what millions of Indian investors are going through right now. Blow after blow, the market has shaken their confidence so deeply that it's now hard to even believe when these dark days will finally end. Every market dip feels like a terrifying nightmare, and every hope turns into a silent, unanswered prayer. Today, we will dive deep into this very crisis. But before that, if you are new to our channel, please don't forget to subscribe so you never miss an update from us. Now, without any further delay, let's begin today's discussion. Investing in the stock market has always been considered a risky move. But when that risk transforms into endless volatility, it no longer remains just a financial loss. It becomes a source of mental stress and deep uncertainty about the future. That's exactly what has unfolded over the past year. Continuous sell-offs by foreign investors, the impact of global events, and now, the Iran-Israel war have plunged the market into a fog of unpredictability. This isn't just a numbers game anymore, it's a storm that's shaking people's sleep, disrupting family needs, and redirecting life plans altogether. In September 2024, when the Indian stock market touched an all-time high, every investor believed their good days had finally arrived. Sensex crossed 85,000 and Nifty soared past 26,000, numbers that felt like dreams coming true. People were congratulating each other, posting screenshots of their skyrocketing portfolios on social media. But the joy didn't last long. As soon as quarterly results began to disappoint, the market started to fall. The first to retreat were foreign institutional investors. And as the sell-off gained momentum, the markets crumbled under pressure. This crash didn't just shake the numbers, it shook the confidence of investors at their core. By the time May arrived, the Sensex had dropped below 80,000 and the Nifty slipped under 23,000. Investors' portfolios were painted red. Social media was flooded with memes depicting the misery of retail investors. Those who had invested for retirement or their children's education were now gripped with anxiety, wondering what to do next. Some halted their SIPs, while others began exiting the market at a loss by selling off their stocks. A wave of fear swept through the market, and just then, another shock struck: the Trump tariff. At the end of April, when it seemed like the market was beginning to stabilize, US President Donald Trump reignited the tariff war. His announcement of a 26% tariff on Indian imports sent shockwaves through the market once again. Spooked by uncertainty, investors began to sell in panic. The echoes of a looming recession were heard once more. Multiple mutual fund NAVs dropped. Foreign investor sentiment took another hit, and pressure started mounting on the Indian rupee. Tariff didn't just affect India, it rocked markets across the globe. China, Europe, Brazil, everywhere there was turmoil. And India, already weakened by prior events, now came under even greater strain. Though there was a temporary sigh of relief when the tariffs were suspended for 90 days, the psychological damage had already been done. Investor confidence had been deeply shaken. Risk aversion grew so strong that many began shifting their focus toward real estate and gold as safer havens. Earlier, where people felt confident about the market, now they were filled with doubt. Every small or large event started having a direct impact on the stock market. And just as the tremors of the Trump tariff began to settle, another tragedy struck: the Pahalgam terrorist attack. This incident not only shattered hearts across the country but also deeply disturbed investor sentiment. In Kashmir's Pahalgam, terrorists ruthlessly gunned down 26 innocent civilians. the nation was left shaken. India responded with Operation Sindoor, destroying multiple terrorist camps across the border. Though it was a strategic and necessary move, the resulting escalation between India and Pakistan caused intense geopolitical tension. The impact? The markets plunged once again. Both Sensex and Nifty saw another sharp decline. Investors began fearing that an all-out war could wipe out their entire wealth. As news of a ceasefire between India and Pakistan emerged, the market experienced a brief rally. But this relief didn't last long. A new crisis was already knocking on the door, the war between Iran and Israel. This wasn't just a regional conflict anymore. Its consequences were being felt across the global economic and political landscape. This isn't just an ordinary military skirmish. It's a conflict capable of shaking the very fabric of the global economy. The reason? The Strait of Hormuz, a crucial maritime passage through which a significant portion of the world's oil supply flows. If war causes a disruption or closure of this route, oil prices could skyrocket, and the ripple effects would hit the shipping industry, manufacturing sectors, and even something as specific as your mobile phone battery. This crisis wouldn't just be about the economy, it would seep into our daily lives. Brent crude oil has already touched $76 per barrel, and experts warn it could rise further. This directly threatens India's economy, since we import the majority of our oil requirements. And when oil becomes expensive, transport, electricity, and food prices all rise. In short, a fresh wave of inflation could once again hit the common man hard. While some experts believe Iran may not dare to block the strait, considering its own economy depends heavily on crude oil exports in a war scenario, no possibility can be ruled out. Until clarity emerges, market volatility will continue, and investors will remain trapped in a cycle of fear and uncertainty. Now the question arises, what should a common investor do in such a situation? Should they pull out all their money and stay away from the market? Or should they gather the courage to hold their ground amidst this storm? According to experts, this is not the time to panic, it's the time to act wisely. A long-term perspective, strong fundamentals, and patience are the biggest weapons investors can rely on right now. India's economic foundation remains strong. There is sufficient liquidity in the banking system. The government is also making efforts to strengthen economic fundamentals. In this scenario, investing in companies with strong balance sheets and sustainable business models is still considered a sound strategy. Continuing with SIPs is being encouraged, and major investors still have confidence in the market. For long-term investors, staying invested in quality stocks can prove beneficial. Because once the situation stabilizes, they'll be the first to reap the rewards. History has shown time and again, those who invest during downturns are the ones who profit the most during the upswings. But that doesn't mean one should blindly invest in just any stock. Investment decisions must be guided by thorough research, analysis, and professional advice. Every sector has its own unique conditions, and every company has a different future trajectory. That's why it's essential to move forward with intelligence and discretion. And yes, one must not mistake every market dip as the end of the road. Often, these fluctuations are the groundwork for a major rally ahead. Investing is a marathon, not a sprint. Those who walk with patience are the ones who win in the end.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources news from various news agencies opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.